We are live. Please go ahead.
Okay. So very good morning to all of you. This is Avinash Sharma, Director SOJM. On behalf of SOJM, I welcome you at this important webinar on issues arising from recent announcement of COVID-19 measures related to income tax. In view of COVID-19 pandemic, the Government of India has announced several relief measures related to income tax since March 2020. While these announcements have helped the industry significantly in the form of reduced rates of interest, extended timelines of various compliances, etc., there are certain questions which arise regarding interpretation and applicability of such announcements. Therefore, to deliberate on such issues, SOJM decided to discuss those aspects over a webcast where the tax expert will update the participants on the issues arising from the recent announcement of COVID-19 measures related to income tax. Today we have with us Mr. Provident as a subject matter expert who has over 13 years of experience in the areas of international taxation, domestic taxation, compliance, and tax litigation and compliance matters at multiple levels. He specializes in direct tax advisory and high-end litigation before the Indian Revenue Authority. He has been involved in some of the largest tax litigation in telecom industry. Now, before I invite him for the presentation, I would like to inform you that you can write your questions or query in the question box, which will directly reach to Mr. Prabhat. He will answer to those. Now, without wasting any time, I would like to invite Mr. Prabhat to share his views with all of you. Over to you, Mr. Prabhat.
Thanks, Avinash. Am I audible?
Yes, sir.
Great. Can all see my PPT?
Yes.
Great. Thank you so much, Avinash. Good morning, everyone, and I hope you are doing well. The topic for discussion today is with respect to certain key interpretation issues arising out of the tax-related relaxations provided by the government in last 3 months on account of COVID-19. To start with, what I have done is I have listed out some of the key announcements which are relevant for today's discussion. We see that the first bullet is taxation and other laws, relaxation of certain provisions ordinance, which was issued on 31st March 2020. This ordinance was issued to provide much needed relaxation on various provisions. And this was preceded by a press release a week before, which was on 24th of March 2020. The next one is clarification, which came with regard to lower withholding certificates. The clarification came on 31st of March. And then there were certain issues in terms of coming out of that clarification or that the accessibility circular. So government issued another clarification on 9th of April, which was primarily in respect of the threshold limit, and we'll discuss about that in more detail in subsequent slides. Then there had been a press release.
Hello. Yeah, can you please run your PPT in full screen mode, sir?
Sure, I'll do that. Is this better now?
Thanks.
Yeah. Then there was a press announcement by the Honorable Finance Minister on 13th of May. And then we saw a CBDT press release also coming on the same issue on the very same day, the evening. We will discuss about that. We will discuss about the issues arising out of that in terms of certain interpretation issues. And the fourth item which is relevant here is the notification with regard to employers' contribution to Provident Fund, which has been reduced from 12% to 10% for the months of May, June, and July for the 3 months. And there had been certain clarification issued in this regard through a FAQ. Now, before I move into the discussion, I just thought I will highlight that whatever I discuss here are my personal views based on my discussions. With that, let me just move to the first issue which is arising out of this. Now, if you see, there's a circular which came. There's a press release, rather, not the circular. There's a press release which came on 13th of May, when the Honorable Finance Minister announced a reduction in tax withholding for various sections provided therein by 25%. If we go to the language of the press release, it says, in order to provide more funds at the disposal of the taxpayer, the rates of tax reduction at source for non-salaried we have to keep this in mind. The clarification or the reduction in the tax withholding rate is in respect of non-salaried specified payments made to residents. So there's no relaxation with regard to payment made to non-resident, and rates of tax collection at source for the specified receipts shall be reduced by 25% of the existing rate. The press release says payment for contract, professional fees, interest, rent, dividend, commission, brokerage, etc. shall be eligible for this reduced rate of TDS. This reduction shall be applicable for the remaining part of financial year 2021, that is from tomorrow to 31st of March 2021. So this press release came on 13th of May, and it says that this is applicable from 14th of May till the end of financial year 2021. On the same evening, CBDT issued another press release and stated the same thing as mentioned above, and also provided a list of specified sections related to TDS and TCS, wherein the rates have been reduced by 25%. The press release says that no relaxation will be provided from a higher TDS rate if there is no furnishing of PAN or Aadhaar. So 206 AA rates of 20% or higher rate as will continue to be applicable. The press release further mentions that legislative amendment in this regard shall be proposed in due course. Now, with this background in terms of what is the language of the press release, we move to the first question which comes is that whether this TDS rate, the reduced TDS rate, can be applied by a payer of income basis the press release. Now, what is the sanctity of a press release? Let's read. I will read this Anjum M.H. Ghaswala's finding, the Honorable Supreme Court, what they said in this case law. It says that it is true that by this press release, the board had interpreted the provisions of the Act in a particular manner. Be that as it may, we would like to make it clear that every clarificatory note or press release issued by the board does not have the statutory force like the circulars issued by the board under section 119 of the Act. So Supreme Court is making a differentiation between a circular issued under section 119 of the Act vis-a-vis a press release issued by the CBDT. It says it is only those circulars issued by the board under the provisions of section 119 of the Act will have the statutory force and will be binding on every income tax authorities. Therefore, the press release relied upon by Sri Ramamurthy, not being a circular issued under section 119 of the Act, will not be of any assistance to the respondent in support of their contention. What basically Supreme Court said in this judgment is that press release does not have that legislative force as a circular issued under section 119 has. Now, if we see the rate of TDS, the rate of TDS or TCS for that reason are provided by the Income Tax Act or by the relevant Finance Act. And so those can be lawfully modified by amending such statutes only. The press release very clearly says that the legislative amendment will be provided in due course. Now, basis this, I think what I'm trying to say is that there is an issue here. I'm not saying that one should not apply the reduced tax withholding rate as announced by the Honorable Finance Minister, followed by a CBDT press release. But one should be aware that the legal sanctity of such a press release had been in question, and there is a Supreme Court judgment on this. And so to that extent, there is an issue here. However, it would be unreasonable, or it would not be unreasonable to assume that in practice, the tax authorities will abide by the press release, which has been issued in such circumstances as we all are facing. And one would expect that the appropriate legislation through an ordinance or amendment in the law will be tabled before the Parliament in due course to give effect to the proposals which have been announced, and such amendments will be effective from 14th of May 2020. That's the expectation. I would assume that if at all, a tax officer takes a different view, and any initiative, any proceedings are initiated against in terms of because of non-compliance or alleged non-compliance, it will be, it will be reasonable to, kind of go and tell the court and, to persuade the court on the reasonable ground that, somebody has relied upon the press release in view of this pandemic, and that is why a lower tax withholding or something has happened. With that, we move to the next issue, which is with regard to as to whether a reduced TDS rate, which is mentioned in the press release, can also be extended to lower tax withholding certificates. So assume somebody has applied for a lower withholding certificate under Section 194C of the Act, which provides for a 2% tax rate in general, and somebody has got a 1% under the 197. Now, whether this 25% reduction would apply to such lower withholding certificates as well. In my understanding, lower withholding certificates are issued according to provisions of Section 197, which is very different from other provision of TDS and TCS. If we see even the press release which was issued by the CBDT, it gives the exhaustive list of sections as to where it would be applicable, and therefore it should be applicable only for those sections which have been mentioned in the press release. And accordingly, it will be reasonable to assume that in the absence of any express announcement in this regard in the press release, the benefit of 25% tax reduction rates shall not be applicable to lower withholding certificates. So these were the two issues which were coming out of the lower withholding, the 25% reduction in the tax withholding rates as announced by the Honorable Finance Minister. With that, we move to the next aspect, which is with regard to lower withholding certificate. We all are aware that CBDT issued a circular on 31st of March, providing as under. It says that considering the constraints of the field officers in disposing of the applications for lower or nil rate of TDS and to mitigate hardship of the payee, the CBDT issues following directions clarifications under Section 119. A. All the assessees who have filed application for lower or nil deduction of TDS on the traces portal for FY 2021. So the first category is taxpayers who have filed a 197 application already and whose applications are pending for disposal as on that date. However, they had been issued such certificate for FY 1920. So the taxpayer has applied for it this year and the taxpayer had a certificate last year. Then such certificate would be applicable till 30th June of FY 2021 or disposal of the application by the officer, whichever is earlier, in respect of the transactions and the deductors or collector for whom the certificate was issued in FY 1920. So net, what the circular says is, you had a certificate last year, your payer has applied for the certificate this year, whatever was the rate last year, that will apply till 30th of June or till disposal of the application. Category B, where the assessee could not apply for the certificate this year, but have the certificate for last year, such certificate will be applicable till 30th June of FY 2021. However, they need to apply at the earliest, giving details of the transaction and the deductor collector to the TDS officer as per the procedure laid down in Para C, which is a new procedure provided for applying for 197. And D is with regard to payment to non-residents, including foreign company, having P in India and which are not covered by category A and B above, tax on payments will be subject to 10% tax withholding. Now with that, if we go to a quick summary, it says, I think I read this for you, saying that filed application last year, there is application last year and you have filed the certificate this year, then there will be an automatic extension. And then there was a subsequent clarification which said that which is basically in regard to the threshold, and there was another clarification with regard to 15G and 15H, and we will discuss this threshold limit in subsequent slides. Now the question which comes is that you are a payer of income, and the payee provides you a lower tax withholding certificate last year, and this year there is no tax withholding certificate which has been obtained till now. The circular says that the benefit of last year can be given this year till the normalcy is restored or 30th June, whichever earlier. However, it says that there is a need for you to, however, they need to apply for the new certificate giving the details of transaction, etc. Now, I think what is coming out of this is that filing of an application by the payer of income this year seems mandatory. If I go back to this, it says, just a minute, I think there's something coming on the screen. It says that, however, they need to apply at the earliest, giving details of the transaction and the details of deductor, etc. So the question is that what if the payee does not apply for the certificate, and I as a payer of income have given you the benefit of the last year's tax withholding? Let's take a step back and think of a situation where a person applies for a lower withholding certificate last year because the margins were low, and the payee believed that the tax withholding should not happen at the rate prescribed in the section, so assume 2% or 10%. And so he applied for a certificate and got a lower withholding, and this year the margins are very healthy for whatever reason, and the payee does not need to apply for a lower withholding certificate, and so he never applies for the lower withholding certificate, and you as a payer of income give the benefit of the last year rate, just reading on the first part of the para and not reading the second part, which says that however such person should apply at the earliest. So in my view, there is an ambiguity here. There may be issues coming out of it if ultimately the payee doesn't file the application, and accordingly, and considering that the consequences of a lower tax withholding or non-tax withholdings are very rigorous, in my view, the payer, in order to safeguard their interest or to avoid any potential non-compliance allegation, should look at getting a certificate, getting an acknowledgement of the payee having filed the application to the TDS officer, if there is one. So you must ask as a payer of income that at least that acknowledgement may be given, and there may be a need to take an undertaking, maybe that I will file in case I have not filed, because if it is not filed and if you give the benefit, there may be consequences, and then any affidavit and undertaking is obviously subject to commercial negotiation between the parties. With that, we move to the next question, which is what happens if the application filed by the payee is subsequently rejected? I think the order of the CBDT provides that where the lower withholding is pending before the tax officer, then the LDC of last year will be extended till 30th June, or disposal of the application by the tax officer, whichever is earlier, and therefore till the date of rejection or 30th June, a lower tax withholding may be applied, and any subsequent rejection by the tax officer should not adversely impact the position taken by the taxpayer. This may sound very hypothetical. Assume you have got a lower tax withholding certificate of 8%, and now the government has reduced the tax withholding rate to 7.5%. I'm thinking of a situation 194J professional payments. Now question is what happens? Will 8% apply or 7.5% apply? Because the statutory rate under the relevant section has become 7.5%, whereas your lower withholding certificate is 8%. Again, there's no clarity on this from the government, but I think if we see the provision of section 197, it says that subject to rules made under this and that, where in case of any person, income tax is required to be deducted at the time of credit, as the case may be payment, under these sections of the provision, and the assessing officer is satisfied that the total income of recipient justifies the deduction of income tax at a lower rate or no deduction of income tax, then on an application made by the taxpayer, the officer can issue a such certificate as may be appropriate. The subsection 2 says, where any such certificate is given, the person responsible for paying the income shall, until such certificate is cancelled, deduct income tax at the rates specified in such certificate. Now, one of the view can be that since I have got a 197 certificate, subsection 2 makes it mandatory for me to follow that rate. And accordingly, unless that certificate is cancelled, that's the rate which needs to be applicable. Having said that, I think if we go into the intent of section 197, it very clearly says that you have a section wherein there's a rate prescribed, and if you believe that actual rate should be less than the rate mentioned in that section because of your income this year being lower or for other reasons, then you can go for a lower tax withholding rate. If we go with that intent, then I think a view can be taken, it seems, that when the main section itself is providing for a lower withholding, then there's no need for you to apply 197, and so the main section rate shall be applicable, because 197 to that extent then becomes irrelevant, and to me sounds like that position should be reasonable. Let's look at this situation wherein this is again something which all of us would have faced practically. Many times you go and apply for a certificate. The format of certificate is it gives a rate, and generally it says that this certificate is applicable till 31st of March of that relevant year. In the sense, this is generally given till the end of the year. Very frequently we have seen situations where in case of some of the payer, the limit will get exhausted, the threshold will get exhausted, and the pay will apply for an extension of the certificate, and that extension will be with a new amount. The validity will again be till 31st of March. But there are experiences, and I'm sure this is very frequent experience, that the tax withholding rate in the subsequent certificate may be different from what was given in the first certificate. So I've created this example that assume that in case of payee 1, you first get a 2% rate and subsequently you get a 1% rate. And in case of payee 2, it's a reverse, 1% and 2%, and there were threshold of assume 10 lakh and 50 lakhs. Now, the first question is, how should the threshold be calculated? As to for FY 2021, what is the threshold? Is it 10 lakh, is it 50 lakh, or is it 60 lakh? Let me read the clarification issued by the government on 9th of April, which says that for the purpose of para A, 2A and 2B, threshold mentioned in the lower withholding certificate issued for F1 1920 will be taken fresh for the period April to June for FY 2021, and the amount of threshold limit will be same as was assigned for this certificate in 1920. So I think it would be reasonable to assume that the threshold is 50 lakhs, is 60 lakhs in my example. And even if you exhaust that entire 60 lakh in the first quarter, that should be okay, because it never says that if I have issued a certificate for for a particular period, then the threshold will need to be divided quarter wise or month wise. I think that's not the intention ever. So the threshold is available for throughout the year, and if you exhaust it within a quarter, within a month, that should be okay. So in my view, to answer the first question, the threshold seems to be 60 lakhs. However, the question issue comes is that what rate? Will this be, assume in case of payee 1, 2% and 1%, 2% or 1%, or an average rate, or the last rate? So again, there's no clarity on this aspect in the circular which has been issued, but I think One view can be that you can apply the first rate for the first threshold, and you can apply the second rate for the second threshold, which probably should be in line with what has been written in the subsequent clarification of 9th of April. Although I completely agree that there may be another view that the subsequent certificates will override the first certificate, and so one can say that I will go with the second certificate. Now, depending upon, but maybe the view one may be more aligned to the practical position in this. Having said that, the taxpayers can decide and choose whichever view they want to take, because there is no clarity, and so there will be some ambiguity and some possible litigation coming on this. But whatever we do, I think that has to be a consistent view for all the pays. It cannot happen that in some cases I take the subsequent rate, in some cases I take the first rate if it is helpful, and that may create a lot of problem in terms of you justifying your position to the tax authorities. And so whatever we do, we should be consistent in that. With that, let's move to another issue, which is with regard to calculation of interest under section 2011A. As I mentioned, that there was an ordinance which came on 31st of March, and the ordinance, the relevant portion, which is the relevant section, is 3, and the 3 is divided into two sections, 3.1 and 3.2. Section 3.1 is with regard to extension of various timelines for compliances, etc. And the second proviso very specifically says that any due date related to payment of taxes, etc. is not covered by 3.1, it is covered by 3.2. So you go to 3.2, which says that where any due date has been specified in or prescribed or notified. Am I audible? I'm getting some message that there may be some network connection difficulty.
No, so
Am I audible, Avinash?
Yes, you're audible.
Correct. Sorry, I'll just read it again. Where any due date has been specified in or prescribed or notified under the specified act for the purpose of this ordinance is Income Tax Act, that is how it has been defined, for payment of any amount towards the tax or levy by whatever name called, which falls during the period from 20th March to 29th of June, or such other date as the government may notify, etc. And such amount has not been paid within such due date, but has been paid on or before the 30th June or extended date, then notwithstanding anything contained in the specified act, the rate of interest payable in respect of such amount for the period of delay shall not exceed 0.75%, and no penalties shall be levied and no prosecution shall be sanctioned in respect of such amount for the period of delay. Now, the only point which we need to notice very important here is how the period of delay been defined by the explanation. It says that for the purpose of this subsection, the period of delay means the period between the due date and the date on which the amount has been paid. I repeat, it says that where any due date has been given and the due date falls between 20th of March to 29th of June, and you had not been able to make the payment within that date, but you had been able to within the due date, but you had been able to make the payment by 30th June or before, then notwithstanding your rate of interest becomes 0.75% for the period of delay, which is from the due date till the date when you pay the amount. Now, if we see section 2011A, it says that without prejudice to the provision of subsection 1, if any such person fails, does not deduct the whole or any part of the tax, or after deducting fails to pay, he shall be liable to pay simple interest at 1% on the amount of such tax from the date on which the tax was deductible. So let's see this example, what basically I'm trying to say is that Section 2011A provides for levy of interest from the date of deduction till the date of actual payment, whereas the ordinance is covering the period of delay from the due date of payment till the actual date of payment. So if you see my example, which says that assume you have done a tax withholding on 31st of March, and so the due date for this payment was 30th April as per Rule 30. Now, what if the actual payment somebody makes on 31st of May because he did not have the fund, and so the payment got delayed, etc., etc., and so the actual payments happens on 31st of May. Now, the ordinance seems to be covering the second part, which is 30th April to 31st of May, but there is no clarity with regard to the interest on the first part. So let's take this example that 10,000 rupees, date of deduction 1st of March, due date becomes 30th of April, but actual payment happens on 20th of June. What I believe that based on various permutations and combinations, this non-inclusion of the first period, which is 31st of March to 30th of April, can actually lead to a lot of complexity in terms of calculation of interest. One is that 30th April to 31st of May you have a different rate, and 31st of March to 30th of April you have a different rate. On the top of that, how do you calculate months? Because if I calculate from 30th of April to 31st of May, I don't know if it is 1 month or 2 months. Is it that from 31st of March to 29th of April I will calculate separately, and that may again be a 1 month or 2 months because the rate says month or part thereof. So where do I say that where the month gets completed? So 30th April, whether it will fall into the first calculation under 2011 as well, and whether it will fall under the second calculation, which is the rate given by the ordinance. And I have taken an example here. So if you see, assume for a minute how the calculation will change in this scenario, and for a minute if we go with the assumption that there is no ordinance, then you will calculate interest for the month from March to June. In my example, March, April, May, and June. You have got 1st March till 31st of March. Then you have April, then you have May, and then 12th day of June becomes 1 month because the rate says per month or part thereof. So there are 4 months, and assume that becomes 1.5% for 4 months. So maybe 600 rupees in this example. Now the ordinance says that for the period which is covered by the delay till actual payment, it should not be more than 0.75%. So how do you compute the interest for that period, and how do you compute the interest for the period which is pre-due date? Now, one way, and I'm not saying this is the only way, there can be different ways in which the calculation can happen. And I also understand that in traces system, the calculation happens on the basis of calendar month. So in the sense, even if you have a two days delay, I think it reads that delay as 1 month. And so one will need to see how to actually do the calculation. But one of the way probably can be that, what if I first calculate the total interest? Assume there's no relaxation given by the government. And out of this, what is the interest for the period of delay if there was no ordinance? So period of delay as defined in the ordinance, but applying the rate of 2011A. So in this example, maybe counting from 30th of April to 12th of June, which may be April, May, and June. So 3 months at the rate of 1.5%. And then can I compare this rate or this calculation with the ordinance rate and take whichever is lower? So that may be one of the way to calculate. But what I just wanted to highlight through this is that because the ordinance has not covered the entire period of delay, there's a big possibility that it will lead to some sort of absurdity in calculation. The intended benefit may not get passed on completely to the taxpayer if they are default in delay or if they are delay in payment of taxes. The last issue related to calculation of interest under section 201 is that whether this reduced rate will also be applicable to non-deduction or non-collection of tax. So as I mentioned, 3.2 is very clear that it's only in respect of period of delay, and the delay starts from the due date, and due date starts only when you have done a deduction. So if there's no deduction, there's no due date, and so if there's no due date, the ordinance doesn't come into picture, and so benefit of reduced rate will not be applicable if there is non-deduction of taxes. With that, let's move to another issue of interest under section 234BC calculation. Now, if we see the press release of 24th of March, it read like this. It says that for delayed payment of advance tax, self-assessment tax, regular tax, TDS, TCS, equalization levy, STT, CTT made between 20th March 2020 and 30th June 2020, reduced interest rate of 9% instead of 12% or 18% per annum will be charged for this period. No fee, penalty, etc. So ordinance is, I think, very plain language saying that, you know, if you are making payment within this period, the rate of interest will become 0.75% as against whatever is the existing rate. But the question comes is that if you go to the language of the ordinance, and I'll read it in the subsequent paragraph, it says like this. Let's read para 3.1 and 3.2. It says where any time limit has been specified in or prescribed or notified under the specified act, which falls due during the period 20th day of March 2020 to 29th of June, and for the completion of such action as any proceeding, filing of appeal, etc., etc., and where the completion has not been made within such time, then time limit for completion of such action shall stand extended to 30th of June 2020. Let's read the second provision. It says, provided that such actions shall not include payment of any amount referred to in subsection 2. So as I said earlier also, payment of taxes related part has been specifically excluded under para 3.1, which extends the time limit itself. And these are now specifically covered by 3.2, which actually does not extend the time limit. Let's read what it says. It says is, where any due date has been specified in or prescribed, notified under the specified act, for payment of any amount towards tax or levy by whatever name called. The important word which was where any due date has been specified, which falls during the period from the 20th day of March 2020 to 29th day of June 2020 or such other date, etc., and such amount has not been paid within such due date, but has been paid on or before the 30th June of 2020, then notwithstanding anything contained, the rate of interest is 0.75%, etc., etc. Now, if we see, there is no extension of due date. If we see there is no extension of due date under subparagraph 3.2, under section 3.2, what it extends is, what it rather does is, it only gives you benefit of reduced rate of interest and no penalty, etc. So while 3.1, extends the due date for various compliances, etc., very specifically, it excludes the payment of taxes from extension related provision. It brings you to 3.2, which does not extend the due date and only gives relaxations in respect of rate of interest and penalty, etc. With that, if I go now to this slide, which says that the press release, which says that for delayed payment of taxes, advance tax, etc., self-assessment tax, etc., the rate of interest will become 0.75%. And this is read with the ordinance, which is actual law, and not, because as I said, press release has its own limitations. The question comes is whether interest under section 234B will be reduced to 0.75% for FY 1920 if 90% of tax is not paid within 31st of March and this tax is paid subsequently on 30th June or after 30th June. Then the second question is with regard to 234C last installment, whether you will pay 0.75%, and FY 2021 first installment 234C, whether again if there's a delay will you pay 0.75%. Now if we see 234B says subject to other provisions this and that, wherein financial year assessee who is liable to pay advance tax has failed to pay such advance tax, or where the advance tax paid by the assessee is less than 90% of the assessed tax, then the assessee shall be liable to pay simple interest. So it says less than 90% of the assessed tax. If your advance tax is less than that, then you pay 234B. Section 211, if we see, it says you have to pay the advance tax in 4 installment of 15th June, 15th September, 15th December, and 15th March. And the proviso says that any amount paid by way of advance tax on or before 31st of March shall also be treated as advance tax paid during the year. Now what happens is the way the section related to advance tax have been worded and self-assessment tax has been worded, the due date is only there in regard to first, second, third, and fourth installment. There are 4 due dates. Those due dates have not been extended. So the due dates remain same. Now, if there is a shortfall in payment of advance tax till the last due date or even till 31st of March, then what is happening is that anything which you pay subsequently, that is actually not advance tax, that is self-assessment tax. So any payment post 31st of March is in the nature of self-assessment tax. And so one can say that the benefit of reduced rate of interest 0.75% is not available because there is no due date for self-assessment tax. So the due date was only with regard to the advance tax. You have not paid the advance tax, and what you paid subsequent to 1st of April is actually not advance tax, which is self-assessment tax. And since there is no due date for the self-assessment tax, and so the reduced rate of interest will not be available. This is one of the questions which may come, although one can always say that self-assessment tax can be paid at any point of time. And so, each date is a due date. I mean, although to me it sounds not very reasonable, because a due date cannot be a very wide open thing. It's like not that every day can be a due date, it has to be one particular day. But if you take that position, then one can try and take the benefit of the lower tax, lower interest rate under section 234B. But in the absence of that clear thing into the statute, there is an ambiguity as to whether the taxpayer will be able to avail lower interest rate under section 234B if assume the payment of tax is made by 30th of June or any date. As I said, if you want to take the benefit of this, what also comes to your help is the language of the press release, which says that for any delayed payment or advance tax, self-assessment tax, etc., the tax rate will be 0.75%. With that, let's go to 234C questions as to whether 0.75% for quarter 4. Now, again, as I said, the due date doesn't change. The due date for the 4th quarter is 15th of March. So if you pay anything delayed, again, benefit of ordinance will not be available, and so there may be a rate of 1% for which you need to make the payment, simply because the due date is 15th of March, and the ordinance says anything which falls due between 20th of March to 29th of June, whereas your 4th installment was falling due on 15th of March, so that is prior to the date which has been mentioned in the ordinance, which is 20th of March to 29th of June. Similarly, the question is that can I take the benefit of interest for the 1st quarter of 2021? Here also there are doubts. Again, one view that you can take the benefit, as I said, based on the language of the press release, etc., but there's no clarity. The another view is that 234C interest does not specifically cover a period. It simply says you will pay 1% for 3 months, 1% for 3 months, 1% for 3 months, and 1% for 1 month. It doesn't say which period it falls. And so if it is not falling within that period, I mean, there's no time limit for which you need to calculate the interest in terms of period of delay, maybe that the entire 0.75% calculation will fail, and so the benefit which is intended by the government may not get passed on to the taxpayer because of the I think because of not having enough clarity in the ordinance. Having said that, we all know that there are certain tribunal judgments, etc., which says that if somebody has paid the defaulted amount of advance tax, assume in next month, so June quarter gets paid by assume July, there are judgments to say that the interest will not be for 3 months, the interest will be only for assume that's 20 days or 29 days or 28 days, and so effectively for 1 month. And so one can try and use that argument to say that, so I will pay interest for 1 month at 0.75%. So that's, I'm not ruling out that possibility, but I'm just saying that there's an absence of clarity. With that, we move out to some of the other issues. One is related to reduction in the Provident Fund rates. We all know that government reduced the contribution amount to 10% from the existing 12% for 3 months, May, June, and July. The question which came is, can somebody still continue to contribute 12% of the basic wages and DNS allowance, or is it that 10% is mandatory? We saw government issuing a FAQ in this regard. Question number 12 of the FAQ says that the reduced rate of contribution is minimum rate of contribution during the period of package. The employer or employee or both can contribute at higher rate also. And so I think very clearly the 10% rate is not a mandatory rate. If somebody wants to contribute to, at 12% as against 10%, that should be possible. Just on as a precaution, I think the employer might like to just take an undertaking from the employee that he has agreed for a higher contribution, so that tomorrow if there's a questioning, that undertaking or that affidavit can be provided from the document can be provided as obtained from the employee. The second question is, what is the taxability of that 2% contribution issued by the employee? There was a FAQ, and as I said, and in the FAQ there's a question number 8 which says that in cost to company model, if rupees 10,000 is your monthly salary, in CTC model the employee gets rupees 200 more directly from the employer. So basically, if you contribute 10%, that 2% becomes salary for the employee, and if it becomes salary for the employee, then it should be subject to tax withholding under like basic salary or any other such payments which are made to the employees. With that, let's move to this question as to whether you can take the benefit of ordinance for section 220 interest. Section 220 subsection 1 says any amount specified as payable in a notice of demand under section 156 shall be paid within 30 days of service of notice of demand. Then subsection 3 says that on an application made by the assessee before the expiry of the due date under subsection 1, the assessing of expiry of the due date under subsection 1, the assessing officer may extend the time limit for payment. So very clearly, if we see there is a word due date which says that, in subsection 3 it says that if the due date of subsection 1 is getting expired, and before that if you make an application, the assessing officer can extend. I think there is a possibility that benefit of 0.75% shall be available to interest payable under section 220 subsection 3 for this period which is covered by the ordinance, which is 20th of March till 29th of June. With that, the another question is, we saw that SEZ Act which provided which was going to get over on 31st of March 2020, the government through the ordinance said that if you start the manufacturing even by 30th of June, you will get the benefit as long as the approvals have been received before 31st of March. Now question comes is, will I get the benefit, which will be my first year of tax holiday? Will it be FY 1920 or will it be FY 2021? Because in normal scenario, any company which would have started a unit in ACZ and would have started manufacturing, etc., they would get the or rendering of services, as the case may be. The benefit will start from FY 1920, and think of a situation where assume somebody would have started in the month of March. So that 1 month turnover will be eligible for first year benefit under section 10AA. Now, because of this change, the way the language is there in the ordinance, which says manufacturing can happen till 30th of June or service can happen till 30th of June. The first year of manufacturing or operation will become FY 2021, and so FY 2021 may become the first year for claiming deduction under section 10AA. I think based on the reading of the section, that should be that sounds okay, but I think the problem is that because government extended the time limit by 3 months for manufacturing, etc., it is resulting into some higher benefits, and whether that higher benefits may get challenged during the course of audits. I think this should be the last slide. The due date for filing the revised return for FY 1920, which was 31st of March, that has now been extended till 30th of June. We all know this, that this 30th of June, I think next week, the time limit will expire. Now, if you see 143.2, it says, it can be issued within 6 months from the end of the financial year in which the return is furnished. So if you would have filed by 31st of March, the time limit would expire for issue of 143.2, would be 30th September 2020. And the time limit for assessment, which was earlier for 31st of March 2021, was extended by 6 more months. But now, because the return itself will get filed by 30th of June 2020, so 6 months from the end of the year in which return is furnished, so the return is furnished the end of the year, which is 31st of March 2021. So 6 months become 30th September 2021. And so I think it is unintended, the due date for issue of notice under section 143.2, as well as the time limit to complete the assessment, has become the same date, which is 30th September 2021. I would assume that in case of transfer pricing, it will get extended by 1 more year, but at least non-transfer pricing cases, the time limits have become same. And I'm not really sure if this creates a problem, because in the past I've seen situation, especially in the context of 148, wherein the assessment time limits of 9 months were expiring before, and the time limit to issue 143.2 was expiring thereafter. With that, the last point is that we had a due date of furnishing the quarterly statements, and those were extended till 30th of June. Similarly, the time limit to issue the TDS certificate, which was expiring on 15th June, is also extended to 30th June. I just thought I will highlight that one would need to file TDS statements in advance, so that TDS certificate can be generated and sent on time, because while the due date for both have become 30th of June, there is a time lag between filing of quarterly statement and issue of TDS certificate, and so sufficient time should be kept there in terms of filing the TDS statement, so that certificates are issued well in time. With that, I think I have come to the end of the presentation. If there are questions, I'll just look at it. Yeah, I mean, there are no questions. I think there's one question with regard to FD interest in banks, I'm not sure, in terms of implication of this, because my presentation is only with regard to the interest as applicable under the Income Tax Act. I have really not gone through as to what are the changes in terms of FD interest in banks. Yeah. So, are there any other question, Avinash?
So we are waiting. There's a request to all the attendees. If they have any question, they can write in the question box. Getting quick queries for presentation. Your presentation will be sent to you by email by tomorrow, along with the recording link.
One question, I think, just a minute. How to expand this? I am working on a laptop which is not mine. Avinash, is it possible for you to read this question if the services were rendered in April?
Yes.
If the services were rendered in April and invoice were raised by service provider in first week of May, but is recorded by the recipient of services in last week of May by service provider post 13 May for services rendered in April. So I think we should see this press release in a way that what government has simply changed is the rate of tax withholding. It has not changed the provisions with regard to the obligation of tax withholding. I think the obligation to withhold tax in most of the sections except few is at the time of credit or payment, whichever is earlier. So I would assume that it will be reasonable that if you are doing a tax withholding, either at the time of credit or payment, whichever is earlier, and if that date is after 13th of May, it should be reasonable to assume that the new rate will apply, and that should be okay. I mean, the authorities can challenge, saying that the invoice is prior to this date, but as long as your accounting system is capable of evidencing this, that irrespective as to what is the invoice date, as long as the invoice has been recorded for the first time after the date of 13th of May, uh, uh, it should be reasonable to assume that the new tax withholding rate will apply, because the tax withholding rates have been changed many times in the past, and generally those are applicable from 1st of June. So whatever you would have done in the past with regard to that change also, I mean, did you only consider after 1st June invoices, or or even the earlier ones, because the recording has happened subsequently? I think the same principle will apply here as well.
Yeah, so there's a question from Mr. Karan Quatra, like any demand raised, wide notice of demand issued under section 156 will also be covered under section 3 subsection 2.
As I said, because of the word due date, 156 probably should get covered, and that is where then 220 comes into picture.
Then there's a question, if the payee has not intimated the status of application as rejected, what are the consequences on payer of income, because the payer has no other source about the status of application made?
Yeah, that's a very interesting question. I think then I will only say that when I suggested that payer should take an undertaking or something from the payee, that he will file the application, an extension of that should be that, and if it is filed and rejected, that should be intimated immediately. Otherwise, any consequences, the pay should bear the implications. Probably that should be the way out of this, because if the system doesn't allow the payer to know as to the application has been rejected, I think you have to rely on what representation the pay is making, and an affidavit that I'm relying on that representation and any consequences will be borne by the payer of a misrepresentation, I think that should be covered in the undertaking.
There's a question: is the lower withholding certificate notification applicable to order obtained under Section 195 also?
Yeah, I think that is written there in the circular itself that this is 195, 197 both.
Then there's a question from Mr. Kayur. Kindly share your thought impact after 30th June 2020 regarding extension of last year's LDC till 30th June 2020, and still LDC is not received.
No, I did not get the question. Avinash, if you can repeat the question.
So the question is: kindly share your thought impact after 30th June 2020 regarding extension of last year LDC till 30th June 2020, and still LDC is not received.
I think the circular is very clear that unless the government extends any of these timelines post 30th of June, the last year's certificate should not be applicable. It is very similar to the principle which you would have applied on 1st of April in the absence of this circular, that last year's certificate is not applicable this year as well. And so the same analogy will apply here, that if the government doesn't extend the timelines beyond 30th of June, and if the payee is not able to get a new lower withholding certificate on 1st of July, then the full rate shall be applied, which is 75% of the rate mentioned in the section.
Okay, there is a question like last 2 years I have not filed tax return on FD. Can I claim my deduction now?
Now you have to repeat this question, Avinash. You said I have not filed the tax return
on FD from last 2 years. Can I claim my deduction now? Yeah, FD.
No, I did not get the question.
Sir, there's a question like the person has not filed tax return on FD from last 2 years. So can he claim deduction now?
No, I think the question is not clear, Avinash. If you have not filed the return on FD, where is the question of any deductibility? Because I'm assuming the audience is talking about the offering of income arising out of fixed deposit, and if the time limit to file the return has expired, there's no option to file the tax return unless the authorities issue you a 148 notice. So the regularization of that return will only happen through a 148 notice if at all comes from the government authorities for reasons recorded by them. Otherwise, I don't see any option of filing the return where the time limits have expired.
But there's a question from Mr. Chetan. Like, if the services were rendered in April, an invoice was raised by service provider
I
in first.
I answered this.
Yeah, okay.
Avinash, I answered this.
Yeah. This question, like, suppose a deductee already had certificate for lower deduction in financial year 1920 at the rate of 1%. Now, application has been made by the deductee for lower rate, say 0.5%. Can we extend the previous certificate benefit as per clarification made dated 9th April 2020?
So I think there's an ambiguity on this point. The clarification seems to have created more ambiguity than what it was earlier. In the sense, I think the language of the April 9 circular, and I think this is last paragraph, which says that where the payer wants the payee wants a lower rate than last year, then this mechanism shall not be applicable, etc., etc. So if somebody goes with the literal meaning of what it is written, because once you have filed an application, you have clearly made an intention known to the authorities that I want tax withholding to be certificate to be issued at a rate lower than what it was last year. And I think the language says in that situation, this circular is not at all applicable to you. So yes, strictly by the language of the clarification, probably that case falls into a full tax rate. But whether that was intended, I have my doubts.
Okay, then there's a question like
because in practice we have seen I mean, this is my experience, and I would assume this is the experience in general, that whatever rate you apply, you always get slightly more than that. And so next year also, again, when you apply, unless your margins have become better and this year you have a higher rate, you may again be applying for a lower rate than what has been given last year. And so there's an ambiguity created by the clarification last paragraph.
Okay, then this question, sir, what will be the major problem arise due to COVID-19 pandemic on taxes? So it's a very, it's not a particular specific topic.
No, I didn't get the question, Avinash. Can you repeat the question?
What will be the major problem arise due to COVID-19 pandemic on taxes?
I am not sure how to answer that question. I think it is all consequential.
So there's a question whether higher contribution of PF 12% like by employer will be treated as perquisite to extent of 2%, like 12% minus 10% for the employee.
I think that will be more like a special allowance, because unless you are paying any other benefit which is in the nature of perquisite, this should be a special allowance. I mean, nowhere it says that you have to give that 2% separate, but if you give 2% as a benefit in cash and not in kind, it has to be salary as a special allowance or something.
Okay. So there's a question like why should the threshold limit be aggregated and should not the last lower deduction certificate prevail?
No, I said this is one of the view. I didn't say that it is not. I'm saying the last lower withholding rate can be taken as one of the view. My only suggestion would be that whatever a taxpayer does, he should do that for all pays, and it should not happen that you take different approach for different pays. So in some pay cases, the subsequent rate may be lower also, and in some payer cases, and in some payer cases, the subsequent rate may be higher. So whatever we go with, we should go with that approach. To me, it was like a threshold and rate. I will use the same, but as I mentioned, even this view is possible. Consistency should be mentioned, but whichever view you take, you can never rule out the risk of litigation. And on all the points which I mentioned, because these are the points which I highlighted with regard to absence of clarity. So where there's an absence of clarity, there's a clear scope for litigation. If you take a position where the payment of tax or interest is less than what can be based on different views, and so any position you take which I discussed will be subject to litigation if it is beneficial to you, if authority picks that matter.
So I don't see any new question also.
Great. So I think that's all from my side. Thank you so much to the audience and to the organizers.
Okay, so on behalf of SHM, I would like to convey my sincere thanks to Mr. Prabhat for sharing his views on the issues arising from the recent announcement of COVID measures related to income tax. I would like to thank all the attendees for sparing their time in attending this webinar. I would also like to convey my sincere thanks to our partners, PricewaterhouseCoopers and Airtel, for their support in making this webinar a success. At last, I would like to inform you that all the this presentation along with the recording of this webinar will be shared at your email ID by tomorrow afternoon. So with this, now we come to the end of this webinar. Thank you very much.
Thank you.